Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Desmond, and today we're diving into a topic that's reshaping the cryptocurrency landscape, the institutional influx into crypto. With big money flowing into digital assets, the game is changing. We'll explore the rise of institutional investment, its impact on market dynamics, the role of ETFs and other investment vehicles, and how institutional adoption is driving mainstream acceptance. Finally, we'll discuss the trading opportunities that arise from this seismic shift. Over the past few years, institutional investment in cryptocurrencies has gone from niche to mainstream. Hedge funds, pension funds, and even legacy financial institutions like JP Morgan and Fidelity are diving into digital assets. So what's behind this influx? 1. Increased maturity of the market. Cryptocurrencies, led by Bitcoin and Ethereum, have grown into a $1+ trillion market, offering the scale and liquidity needed to attract institutional investors. 2. Perceived hedge against inflation. As inflation concerns rise, institutions are turning to crypto as a hedge, similar to how gold has been used historically. 3. Growing infrastructure. Platforms like Coinbase, Binance, and Gemini are offering institutional-grade services, including custodial solutions and compliance tools, making it easier for big players to enter the market. So, how does the rise of institutional investment affect market dynamics? Here are the key points. 1. Increased stability. With larger players entering the market, we're seeing reduced volatility in major cryptocurrencies. Institutional investors bring long-term capital, which helps stabilize price swings. 2. Liquidity growth. Institutions trading in significant volumes add liquidity to the market, making it easier for all participants to execute trades without major price impacts. 3. Shift in market focus. The presence of institutional money has driven a focus on blue-chip cryptocurrencies like Bitcoin and Ethereum, while smaller altcoins may face less attention or scrutiny unless they offer unique value propositions. 4. Regulatory pressure. As institutions enter, governments and regulators are paying closer attention. This increased oversight could bring both challenges and opportunities for market participants. One major factor driving institutional adoption is the rise of investment vehicles like ETFs and how they're shaping the market. 1. Crypto ETFs, exchange-traded funds, ETFs, allow institutions and retail investors to gain exposure to crypto without directly owning the underlying assets. Bitcoin ETFs in particular have seen significant inflows, offering a regulated, easy-to-access option for investors. 2. Grayscale and other trusts. Investment trusts like Grayscale Bitcoin Trust, GBTC, have been a key on-ramp for institutional money, providing exposure to digital assets while adhering to regulatory requirements. 3. Futures and options. The availability of crypto futures and options contracts has allowed institutions to hedge risk, manage exposure, and trade with greater confidence. These tools are making it easier for traditional investors to integrate crypto into their portfolios. Institutional adoption isn't just about big money, it's also driving mainstream acceptance of cryptocurrencies. Here's how. 1. Legitimization. When companies like BlackRock, Fidelity, and Goldman Sachs invest in crypto, it validates the asset class in the eyes of the broader market. 2. Integration with traditional finance. Payment processors like Visa and MasterCard are integrating crypto payments, while banks are offering crypto custody and trading services, bridging the gap between traditional and digital finance. 3. Education and awareness. As institutions educate their clients about crypto, public awareness and trust in the asset class continue to grow. This adoption is transforming crypto from a speculative market to a recognized part of the global financial system. Finally, let's talk about how traders can capitalize on this institutional influx. Here are some strategies. 1. Focus on blue-chip cryptos. Bitcoin and Ethereum are the primary beneficiaries of institutional adoption. Traders might consider focusing on these assets for stability and long-term growth potential. 2. Take advantage of volatility in smaller altcoins. While institutions focus on major cryptos, right, smaller altcoins might experience increased volatility, creating opportunities for short-term trading. And that's a wrap on today's episode on the institutional influx into crypto. Thanks for tuning in. And in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.